Good evening, all. Ira Epstein, and here we are with your futures market wrap-up. And this wrap-up is for the evening, and it's late. It's just after 7 o'clock. I'd like to be done at this hour. It's 7 p.m. Central Time, and it is the 16th of March, 2023. So the day's events were fascinating. European Bank came to the rescue of Credit Suisse. They now have $54 billion that they can work with. They're trying to get UBS to step in and take it over. And UBS is being dragged and saying, no, we don't want to do that. It doesn't fit in with our culture. It doesn't fit in with all the things we're doing. And look at how many employees we'd have to fire. Pull out that card. That was a great card. But they want parts of the business, but they don't need all the business that Credit Suisse is in. Some of it doesn't fit their culture. Then you turn to the United States, and as you know, First Republic, I woke up this morning, and I get up early, and I'm looking, I put in the symbol, I said, what? It was down 30-some-odd%. And I'm going, oh my God. So here we go, another failure. Well, later in the morning, word started coming out that a consortium of U.S. banks decided to take money and give it on deposit, not share, they're not buying anything, into this bank so that it eases the cushion. You know, you can afford to be magnanimous, and I don't say this in a negative way. I say this in a positive way. You can afford to be, and you should be. When a fellow brethren bank that is in good shape, it would be normally in great shape, actually, but all this craziness going on with the value of what's happening with the underlying portfolios. And you get, for example, Bank of America, $15 billion over the past 4 or 5 days. That's numbers we're being told so far. And Goldman's got to have money. Others are getting money. Give back some of it for deposits. You don't have to commit to how long they're going to be there. So they did it. And I congratulate them. It's smart. It shows that the banking community can do some things on their own. Congratulations, guys. I am very pro what you did, okay? And it deserves a round of applause. When you look at the S&P, though, where was this going to take us? You know, the 18-day average is right here. I see resistance at 39.89. I know everybody wants to get bullish, blah, blah. Well, here's what I got to warn you. Fed Chair Powell, unless there's another bank shoe that drops, is going with 25 basis points, in my opinion, on Wednesday. Why not? He just had a free look. He saw European Central Bank Lagarde go for 50, and the market didn't flinch. I'd go for my 25. And why should he do it? He hasn't beaten this labor market. The unemployment claims are proving that. When you take a look at the charts overall, okay, you've gotten a bounce here. As you saw on the weekly chart, resistance is just above you. You have an uptrend at work on the micro mini, higher lows, higher highs. Unfortunately, look where you're at. If I'm a pro, which I think I am, and you got long here, which I don't try to buy under the 18-day average, you're in the resistance zone. Even if you clear it, you'll probably fight with it for a bit. I'd be very careful. This is where I think money, relief money, thank God we didn't crash. That's where I think they're coming out of the market. The cover short area began right here. I pointed that out. And I'm saying that the sell area, where you're dumping if your long's there, I am not saying to go short there. We'll cover that in the weekly charts when we get to Friday. And by the way, before I get too far, you like what I do here? I ask one thing of you. I put a lot of time and effort in this. If you like it, give me a thumbs up. It takes a click. It doesn't take much effort. It helps us with the algorithms, and then we get more viewership, and that's what we want. As you can see here on the micro mini S&P, the momentum trying to pick up a little bit. Okay. Again, more of a correction of an oversold market than a new buying condition so far. When I take a look at the micro mini S&P, I have the S&P NASDAQ. That's funny. That's how tired I was. I put a new label up there. This is the NASDAQ. I'm laughing at myself. I didn't see that yesterday, I think. You went down for the major support at the 100-day average and the Bollinger Band. Where are you now? You're at the upper band. What would I tell you if you're sitting next to me? That elbow goes, bingo, hit you in the ribs. Maybe I'll break one of them. Why? Did you get out? I don't care if you're going to tell me this market, Ira, is going to roar. It's not going to stop. We're at the highest highs we've recently been, and it's going to go. Okay, I know you're right. But I know that 5% of the time is all you're staying over that band. By the way, why is the NASDAQ up? Because it's the one index with no banks in it. In the Dow, you've come down here, playing a game, but you got up, I think, and you're getting up to try to get over these highs right here. You haven't done it yet, and that would negate the downtrend. Plus, you're oversold as can be. Nah, I can make an argument here for no reason that it can get back up to the 18-day average if it wants to. In the mini Russell, now today was the day that I was looking, and I had put out, I don't mind telling you, last night to go short this market on a rally. My price was never hit on the upside in the futures contracts. They were hit in the spiders, so the ETF. So that you did get, not here. Why did I back off? Because you lost the embedded reading. You got a reading of 21. Now, if I come back, look at the close. Here's the close, one move. There you are. You're over 21. So you either collapse tomorrow morning, come back down, or even I'd be very fearful of the position that I put on the ETF. Okay, so I've got my hands full. I wanted to sell the rally. This numbers didn't get up high enough, and I explained to my full subscribers today when I wrote the 11:30 update for them. I do send updates out during the day, written ones, and I said the way the math is going, any further move in the afternoon, you're going to lose the embedded reading. It's exactly what occurred. The spider ETFs on the IWM got hit earlier in the day before I did that. On the T-bond market, you got up and you're fighting at the upper Bollinger Band, and you're overbought. And I think the Fed's going up a quarter point. I'll let you own it. I don't want to own it right now. 5-year notes, you can see, overbought, fighting. It'll probably get back to the 100-day average and fight a battle between there and that number. Wouldn't surprise me. The market's now got to go into a hunkering period if another shoe doesn't drop. Notice we don't hear from any Fed members because you're in the quiet period leading up to Wednesday's FOMC meeting. And in the dollar index, all you did in this market is you got down to the Bollinger Band. Please take a look. Where I tell you, that's where I think the pros, you're oversold, you're going to get short covering. And what did the market do? You have an outside day up. You think it's going to the moon. I have that outside day course. Take it. You learn what it's supposed to do. And the market's backing off at key moving averages. Now the question is, was that it? Or is there another leg left to the upside? Eurocurrency is the opposite. It was dropping and it found its legs right here, just missed hitting the Bollinger Band. And now the question is, what does it do with the 18-day average of closes? In the British pound, we're going to hear from the good old Brits very shortly on what they're going to do. So they're watching what Europe's doing. They'll probably see us go a quarter point. What do they do? I saw the budget that Mr. Hunt gave. Very bold. I certainly like the Mr. Sunak. He's excellent. He doesn't get himself in a lot of trouble. But the politics are so crazy there. You never know who's going to last more than a term or two. It's rough, okay? They're rough. And you can see the higher lows, higher highs. I think the market finds some support right there on pullbacks. But is it a buy when you're overbought? I don't think so. In Bitcoin, this has been a heck of a rally from the lower Bollinger Band to the upper. What a move. This was the cover zone. I never saw the upside coming, okay? Blindsided, 100%. Did not see it coming. But I saw this completely, and I was telling people you don't want to be staying short. I had no reason to think buy. Nothing on that chart. Brent versus WTI. Well, now the spread's moving out again, which means our is getting weaker. You're climbing back into the Bollinger Band here and here. So Joe, did you do the buying as you're supposed to? Because here you're at 68.51. You were just down here to $66. Come on. If you're just buying every dollar down or every 50 cents, whatever your game plan is, who cares? You owe us the oil. In gasoline, as I said, it's overdone. Too soon for the spring, summer, but doesn't, on the weekly charts, whole different world showing up. We'll talk about that over the weekend. Natural gas, you can see the battleground right through here at the 18-day average. Still bearish, but too oversold for me to tell you to do anything. So what do? I'd like to give you access to my morning subscriber video. Doesn't cost you a penny to try it. Move your cursor up here. You'll see an icon. It'll take you into the free offers. Sign up and away you go. That's where the real meat and potatoes are. I'll see you in the morning there. You take care.